Okay, we have Michael Diamond Jr. here with us. This is an IntelliTrader conference call, and Michael Diamond is the international trainer for IntelliTrader. Michael's earned his business degree from UNLV, and since the year 2000, Michael's been aggressively active in bonds, stocks, and options, the S&P 500, and the FOREX. He's earned his master's degree in FOREX training, and he successfully introduced and trained hundreds of people the actual nuances of the market. So we have Michael Diamond Jr. here. How are you today, Michael?
I'm doing real well, Rob, and yourself?
Fantastic, sir. So good to have you here. And just want to address a couple things for some of the folks looking at this for the first time, Mike, and that is, this product is pretty exceptional. A lot of us have started with a demo version, and we've downloaded it, and we've kind of seen this thing, and it's getting a lot of attention. But Mike, if you could just kind of briefly share with us, how does this product work? I mean, what makes it so unique in doing what it does?
Sure, Rob. And, from, my 8+ years of, trading the FX market, also known as the Forex market, day in and day out, I finally came to the realization that, speculating in the currency market is definitely a marathon and not a sprint. And, Rob, we all know there's a lot of different trading systems, mechanisms, trading strategies, automated programs and whatnot. And all these forms of trading, have always been focused on taking advantage of a specific type of market. And, Rob, I don't care if someone trades stocks, bonds, indices, commodities, or in our case, the FX market. All of these markets either trade within a trend or within a range. And, what makes trading or, speculating the markets very appealing, Rob, is the fact that these, central markets trade within an average daily range majority of the time. And, one can potentially do, very, very well, within a specific market range. And then also, we have the trending market, also known as, that transitioning market, which, makes up the majority of the market action. And, attempting to take advantage of this, I like to call it fast-paced market action, possesses much more of a risk than trading in that mainstream market range. But once again, this type of market can also potentially generate very positive returns. However, Rob, as a lot of people have found out, the foremost risk in trading either market type is that these markets can change, from a trend to a range or vice versa at any given moment. And see, Rob, it's this ever-present transition that, as you know, makes trading any market for that matter, very involved and risky. And it's this transition that isn't taught, wrote about, or addressed, or even most traders are not, are just completely unaware of how to handle this ever-changing market, this transition. And, most traders or people that attempt to handle this risk via, your traditional stop orders, stop losses, what have you. Whereas with our software, the IntelliTrader, our risk is attended to extremely differently from the most traditional methodologies. And truly, Rob, that's what sets the IntelliTrader apart from everything else out there. It's the fact that it greatly takes advantage of, that mainstream market movement and that trending transition marketplace. And the IntelliTrader, what it does is it automatically places arbitrage orders or hedge trades amongst a chain of currency pairs that are, genetically linked and correlated. And, for that novice, Rob, and I know there's a lot of individuals that are, haven't spent 8+ years day in and day out trading the Forex market. For that novice that's not familiar with the terminology of being correlated is simply, currency pairs that for the greater part of the time predominantly mirror one another. If one currency pair goes up, the other one goes down, vice versa.
Now, when you say, Mike, may I ask a question there? When you say currencies mirror each other,
yes, sir.
Can you define that? Are they similar in value?
No, they're not similar in value. What it is you might have one currency pair, and they're genetically linked by a common currency. Because for you to be able to take advantage of the Forex market, essentially what you're doing is you're buying and selling and trading currency. And what we're doing is to be able to buy and sell currency, there has to be two currency pairs within, for example, within the market that you want to trade.
I see.
And within the Forex market, we have many different currency pairs that we can trade and take advantage of.
Now, the software doesn't actually choose those currencies. We do that, correct?
Correct. See, that's a part of our methodology where we find currencies that, where correlation or that mirroring effect doesn't occur 100% of the time, and that's a divergence or that a deviation within this correlation, Rob, is what allows the IntelliTrader to capture low-risk hedged profits. In other words, what it's doing is the IntelliTrader is exploiting these well-placed and connected arbitrage orders, and via the IntelliTrader's cash guarding, it eliminates any lingering drawdown and curtails that negative effect, for the next IntelliTrader run.
Does it actually eliminate the lingering drawdown, or does it lessen it?
Well, it does lessen it, and it does eliminate it. Now, for us to be able to, just like any other market, you have to have open orders. And what we're doing is by hedging our trades or, creating genetically linked arbitrage trades, what we're doing is we're greatly reducing that risk where profit will show up on the table when there's that, deviation or divergence within those mirroring effects of those currencies.
So what you're saying is that there's a motion that occurs. Now, let's kind of put this in layman's terms. So motion happens, either a currency goes up over the other one in value or goes below. Is that how it works?
Yeah, precisely. It doesn't make a difference in our markets if the markets go up, if the markets go down, if the markets go sideways, if the markets trend, if they range. It really doesn't make a difference because we can take advantage of every type of market.
So that's a very interesting point that you just shared here, Mike, because a lot of us recently, we're now here, we are in the week of November 10th here, 2008, and last month in October, we saw the collapse of Wall Street pretty much. I mean, we haven't seen the statistics crash like this since the Great Depression. And as we know, the people that have been involved in Wall Street, many people lost severe amounts of money. There's some major damage done there, and still is happening out there. And what's been interesting is that when a lot of us who've had this software, we've been watching it through that week and saying, geez, how are the currency markets with the IntelliTrader software going to hold up through this, the worst week ever since the Great Depression? And Mike, we saw, and personally saw, and many people I know who have this software, we saw our best week as a result of the crash out there. How could that be?
Well, because that week happened to be one of the greatest transitions I've ever seen in the marketplace. And see, that's one thing, one of the unique aspects about our software. It not only takes advantage of that range-bound market, that's the majority of what the market, that's the mainstream market action, but it also takes advantage of that transition or that large trending market. And see, most people that trade, stocks or bonds, they don't have this type of software that can basically bridge those type of markets. And that's what we're using here, is we're using a piece of software that allows us to make that transition from one type of market to another.
So in other words, volatility is not a bad thing here. In other words, I don't like to look at it from that standpoint, but no matter how bad things could get out in Wall Street, this thing has a way of going in there. It's a little computer, actually, it's a little robot that goes in there, and it can actually capitalize on that. Is that what I'm hearing?
Well, yeah, exactly. Every single trade is automatically done, automatically placed, automatically taken out. That's the thing about the IntelliTrader is all you have to do is get it set up and turned on. Once it's set up and turned on, you'll leave it alone and you don't touch it. And what it does is, yes, we actually like volatility. We like the markets when they go up and down, when they move around, because that just gives us opportunity to make that much more money. And even when it doesn't, there will be months and times where the market will, slow down and go sideways. It just, and there's a lot of different variables. The time of the year, the announcements that come out, economic, interest rate changes, so many different variables come into play, but it doesn't really make a difference with our software because it's programmed to work in both types of markets.
Well, this brings out an interesting point because, we're now facing a major recession here in the United States here, and what I'm seeing with this product, I've been watching the demo account, and I'm going live myself with it this week, and because I have the confidence, been watching this for the last month. But what I'm seeing here is that we have a product that can actually create a revenue source in spite of the recession. In fact, thrive on what's going on in the world marketplace out there. Is that correct?